With the Indian equity markets having reached new highs over the last few weeks, is there a case that the markets might now be overheating? We think there's a couple of red flags which you should consider, as this could lead to a market correction. The first red flag is really towards the rise in the small and mid cap indices. It's been a great run over the past few months. And every single small and mid cap company has been painted with the same brush, i.e. that it's going to be doing very well, it's going to grow exponentially over the next 3 to 4 years. This really can't be the case. Admittedly, there will be some very good stocks and companies which will do well over the next 2 to 3 years from this small and mid cap base, where the corporate governance, the products and the industry that they're in is going to show strong growth. But you can't expect all of these companies to do so. So we think there's a red flag from the rise in the small and mid-cap companies. The second is that the number of retail investors and high net worth individuals investing in the market is also at a high. And historically what you've seen is that once markets correct, these are the first investors that rush to the exit door. So you could see an exponentially kind of sharp fall in small and mid-cap stocks if this was to happen. Equally on the way up, you've seen this huge rise because of these investors. And I think the third and last red flag for us is the market cap to GDP ratio, which is currently around 115. Again, if you look historically, when it's reached these levels, either something globally or locally has happened, which has brought markets down quite sharply. So this is the final kind of concern that we have. Overall, though, whilst the indices might not, really the Nifty might not see a big correction, we think that the pain may well be felt in that small and mid cap segment. So that's where our concern is at the moment.